So that's a very important thing. When you've got all three, when you've got fair accounting, when you've got fair, securities treatment or trading treatment, and when you've got fair banking treatment, then you'll see mega corporations that will think, okay, well, this is a reasonable thing to do and it's practical to do. Until you've overcome those three, then you've got problems to solve.
Michael Saylor discusses various topics, including Bitcoin treasury adoption, its organic spread, custodial considerations and risks, yield generation in Bitcoin, its unique properties, and more.
People oftentimes they fixate they think the lesson of Satoshi is don't trust any counterparty. I don't think that's the lesson of Satoshi. I think the lesson of Satoshi is if you can store your money for 1,000 years without a counterparty, you've created perfect money, right? I think, or perfect digital capital. I think that's the first lesson. And I think the second lesson is if you can move the Bitcoin without a trusted intermediary, now you've got an open global network. And what it really means is that 300 million companies can settle with each other. And that means that 50,000 banks can settle with each other. And so this becomes a settlement network. It's not that Bitcoin allows you to avoid depending on a custodian. The deeper idea is Bitcoin gives you a competitive market, a global competitive market for custody, and you have the option to move $10 billion in 1 hour anywhere in the world to any of hundreds of millions of potential custodians. And so that creates a competitive market, a free global capital market, and an arbitrage between every type of custody and every country and every form of possible custodian. And what is it? The last resort, right? As a last resort, you can take self-custody.
Mm-hmm.
And you don't have the ability to take self-custody of $10 billion of Apple stock as a last resort. And you don't have the ability to take self-custody of $10 billion worth of real estate as a last resort. And you don't have the ability to take self-custody of $10 billion of gold as a last resort. And so the last resort is useful, but really, a more practical thing you find in life, and every corporation finds this out. It's like when you need to buy electricity or when you need to buy oil, yelling at General Electric or yelling at Exxon that if they don't give you a better deal, you'll just drill for the oil yourself. That's not credible, right? The salesperson looks at you and they laugh at you like, yeah, sure, you're going to start your own petroleum company, drill for your own oil. I bet you will, right? A much better negotiating strategy to say to the gas station, if you don't sell me gasoline at a reasonable price, I will go across the street to your competitor, or I will do business with Chevron instead of Exxon. And so generally, if you want to get treated fairly, any business school would say to you, okay, you create a competitive auction and you find the 2 or 3 specialists.
Bitcoin's recent surge above its 2021 peak of $69,000 has pushed most holders back into profit, raising concerns that ongoing profit-taking could lead to a more significant price correction. Data from crypto analytics firm CryptoQuant indicates that only 7.6% of Bitcoin investors were in a losing position when the price reached $67,341 on October 23rd, accounting for 92.4% of the supply in profit. Independent analyst Axel Adler-Ure noted in an October 22nd post that most coins were acquired at around $55,000. The percentage of supply in profit versus loss is assessed by comparing the price at which unspent transaction outputs, UTXOs, were last moved to the current price. The accompanying chart illustrates that if Bitcoin remains above $55,000, over 90% of investors will stay in profit. A high percentage of profitable holders often signals an overheated market, which can precede or coincide with price corrections. Consequently, This on-chain indicator suggests that Bitcoin's price may experience pullbacks in the coming days as investors take profits. Additionally, open interest in Bitcoin derivatives reached a new record high on October 21st, as BTC approached the crucial psychological level of $70,000. Open interest exceeded $40 billion for the first time, according to futures trading platform CoinGlass. Open interest represents the total value of outstanding futures contracts, indicating the level of investment in Bitcoin derivatives. Increased open interest typically signifies greater leverage and market volatility. Notably, Bitcoin CME futures open interest also hit an all-time high of 179,550 BTC, valued at approximately $12.1 billion at that time.
You know, when you're the restaurant and you want to lever Coca-Cola for a better deal on Coke and Diet Coke, you don't threaten to create your own, beverage company or do it yourself and create Mikey Cola. What you do is you bring in you have the Pepsi sales guy, you have the Pepsi hat sitting on the table. You say, I just met with the dude from Pepsi and he offered me a better deal. And the Coke sales guy goes back to the district manager and says, Pepsi's in there talking to them, so I think we better give them a better deal. And of course, there's only Coke and Pepsi. That's only two. As a practical matter, you have to have two. When there's one, you're in deep trouble. But Satoshi gave us 10,000, right? 10,000. There's 50,000 banks, right? If you get like 100 custodians competing with each other, you're going to have a pretty good market and a pretty fair market. And I think that's what's going on here. So the big institutional holders like MicroStrategy or the big ETFs, they're going to use regulated custodians. They're going to put pressure on them. By the way, there's the crypto anarchist and there's the libertarian view, not your keys, not your coin. And it's an important mantra. But barking at Coinbase and telling them, or barking, at Mt. Gox, or, yelling at some exchange to be better on Twitter doesn't work, right? I'll tell you what works. When BlackRock has $20 billion of assets, and then the guy that runs the BlackRock ETF goes to talk with Coinbase.